The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, in order to have a wonderful 4th of July, make sure you buy a 5th on the 3rd. That was an old joke back in the days of Indiana when we had they would not sell any liquor on Sundays and holidays. Anyway, let's moving. Marshall probably remembers that. Anyway, if we take a look here at the DAX, you'll see we've had a little bit of a rally, nice little ABCD pattern, but the one that was the easier of the two to buy, in my opinion, of course, was the FTSE, because the FTSE had a beautiful head and shoulders pattern there, folks. This is about as nice as head and shoulders pattern as you're going to find, because the distance between your shoulders are exactly equal. They come in at the same price and the same time. In other words, the distance between the left shoulder in the head and the right shoulder in the head are exactly equal. That's how this pattern was described in Dr. Andrew Lowe's book, The Non-Random Walk Down Wall Street. In fact, all of the patterns that they looked at in there were mathematically defined, by looking at time and price and symmetry. So it was a way of looking at a pattern to give you an idea that not only do they repeat, but they do so with regularity in such that they can be actually programmed into a mathematical formula. That's the main thing that it's all about, is it puts the odds in your favor. So that's the key to that book. The problem is the book has got so many big, we're talking monster, names of formulas that you can't even pronounce, let alone describe what they are. Now, there's a really strong seasonal coming due here very shortly, folks, that we need to take a look at. Those of you that trade in the live cattle market, I think you'll enjoy this one, because it is fulfilling just about absolutely perfectly. This is October cattle. We're coming into the holiday, and we're completing a beautiful ABCD pattern right at the 61% retracement off of the February high, which was a big double top. From there, we went from 117 down to 101, and we made a double bottom. From that level, we rallied up, pulled back to a 78% retracement, and then we're completing the ABCD pattern here in October cattle. In fact, there's a double ABCD pattern in there that I didn't mark, that if you look at that last swing from the middle of June, around the 19th of June, you'll see that that's also completing an ABCD pattern up there at that 111 area. So that should bring in a little bit of resistance, and we'll see if it has anything. But remember, the holiday starts tomorrow. We'll be back normal on Thursday and Friday, but this is a big holiday, and the stock market closes early today, I believe. I'm not sure if it closes a half hour earlier or just a few hours, but I know it does close earlier. So you're going to see what we would think would be lighter volume, of course, and we're seeing a huge rally this morning that started last night. Remember, the Dow was down 194 points yesterday, and it turned around and rallied to be up about 35 or 40 points, and now we're up about 150, I believe, in the Dow this morning, continuing on. And all we're doing there is just completing another pattern. The fact that we're getting above the 2740 level on the S&P means something for the shorter term, but for the longer term chart on the daily, it really doesn't really mean that much. Now, if you remember last Friday, we had our good friend Stan Harley on the tube listening to us, or we were listening to him, and he gave us this chart that I thought was quite interesting, looking at this 112-day trading cycle. And if you'll notice that it was due to come in on what? July the 2nd, and by golly, it looks like that's what it hit. So that cycle should be bottoming here, which we rallied over 300 points in the Dow since yesterday, so that would most probably be that cycle coming due. So Then this is watching the trading days. You know, folks, he does a great deal of work on that. Sometimes it works, sometimes it doesn't, but history tells you that you ought to look at it, because if you match it up with the pattern, then you have a pretty good, something that you can actually look at and say, that like something that I could use, because I'm able to, really put some probability along with the pattern itself. Now, one of the questions that's been asked of me this morning is, what do you do when you have a Gartley on the daily chart and you have a bearish Gartley on the daily chart and you have a bullish Gartley on the 30-minute chart? Folks, that's a very simple question to answer. You have to trade the time frame that you're looking at. If you're trading a 30-minute chart, you should only trade that 30-minute chart. The problem is you get into a 30-minute trade and it really starts to work, and the next thing you're doing is you're looking at a weekly or monthly. That's not the way it works. If you did that pattern on a 30-minute chart, take it off on the 30-minute chart. Don't go switching back and forth. I think that's a very, very hard thing to do. It's just it's really, really difficult. Let me just give you an example here. Let's just take a look here at the euro just over the last few days here, what the euro has done. Now, this is just a 15-minute chart on the euro, and I watched that because you get some really good swings. You'll notice we made a nice bottom down on June 28th. We made a little Gartley pattern. The market rallied up about 70 pips, which is the harmonic number, backed off to the 61% retracement down there at 1547. From there, it went up and made a really nice butterfly pattern up at the high there at 1695. And that is what? That's 3 times the harmonic number. It pulled all the way back yesterday to the 61% retracement to the exact tick at 1.1590, and since that time rallied 80 pips, going up to the 78% level, and it did it with a beautiful ABCD pattern. Now, if you're trading this on a 15-minute chart, the dailies and the weeklies and stuff mean nothing to you, because this is what you want to be looking at. This is how you control your risk. This is what's going to give you your short-term profit opportunity. So don't go jumping around, looking at a daily chart after you put something on, because, do one chart at a time. If you're going to do a daily analysis, do the daily analysis. If you're going to do 30-minute or 15, do that, because that's what you have control over. Pattern recognition is all about trying to find an edge by looking at a pattern that gives a positive expectation. And if you're looking at a 30-minute chart, that's not going to show up very often on the daily chart. Occasionally it might, but not often. So remember to do that. I think it's important to keep in mind that trade the time frame that you're in, because if you don't, you're just going to get in. First of all, you're going to get very, very confused, because you're going to see multiple patterns. I mean, you're going to get a bearish Gartley on the daily, and yet you have a bullish Gartley, on the 15-minute. They're 2 different charts. So, and the other thing that's proof of this is that if you took off the X and Y axis, in other words, the time frame and what the price was, and you didn't know what you were trading, nobody could tell you what it was, because all of these charts look alike. They're all ABCD related. They all have expansions. They all have contractions. That's simple. And that's the premise of Dr. Andrew Lowe's book, is the fact that they do all look alike, but they are predictable within limits. So let's keep that in mind. Oh, first break coming up already, 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. We're going to talk a little bit about platinum. This was the chart that we were looking at Friday, that we were looking for potential for platinum to come down to the 1.618 level at 832. What I'd like to do is to walk through the sequence of what happened after that point. As you can see, by the next chart, we finally got down there to that 832 level without any trouble at all yesterday, with gold being down, $14 and everything. The problem is that right after that happened, for about 5 minutes, it held at 832, and then you can see that it broke through that level, and it went all the way down to 812 was the low. Now we're having a pretty strong rally today. This is the first almost $15 rally that we've had in gold in well over 3 weeks. All the rallies have only been about $7 to $10. So this is one that's it's basically trying to alleviate a very, very oversold market. My opinion is I still believe we're heading down to that $1,200 per ounce level in the gold. We're not very far away. The silver has held up. We broke below the coveted $16 per ounce level. In fact, we got down to $15.80 and change. We're a little bit above that right now, but to me, we've got one more jab down in that gold, and that might be a major bottom coming in at that point. But right now, with a holiday mode coming in here, I would certainly not be buying gold, especially buying it up, $14. This is just basically the first really good rally we've had in gold, in a very, very long time. It's been well over 3 weeks since we've had a rally of this magnitude. No rally has been more than $11 all during that time. Right after that 382 move to the downside, that was telling you that it looks like we're getting ready to have something really dramatic happening. Now let's take a quick look here, and we'll take a little bit more than a quick look. Let's just look here at this NASDAQ, because I think it's going to be an interesting one here to pay attention to. If you'll give me 1 second, we'll get it up here, hopefully. Uh-oh, did Larry lose it? No, Larry did not lose it. Larry found it. So here we go. Here's the NASDAQ. We're up quite a bit. We're almost up to point D, as I recall. I don't know if we've hit 71.54. We should be pretty close. Let's just double check to see if we got that, because I did this last night, and by golly, we hit 71.61. So it completed that ABCD pattern right was, pretty much what we were looking for. Now, remember, the day before a holiday, which is today, has a very high probability of the market closing higher, better than 7 out of 10 times. And the fact that we're up so much early may mean something, or if we sell off like we've done other days. But this is just completing an ABCD pattern, folks, right up at the 50% retracement of that whole move down. So this is just alleviating, some bearishness. That's really all it's doing. So it is completing that beautiful ABCD pattern. We're doing the same thing in the Dow Jones, only the Dow Jones has not, the Dow Jones has to be up better than 300 points in order to complete that ABCD. Whether it's going to do that or not, I'm not sure. But the NASDAQ has been the leader of the pack. And so kind of keep an eye on that one, because that's a beautiful ABCD pattern coming in exactly at the 50% level. And that came in at, I believe, 71.57. The high was 71.62. We're now trading about 14 handles under that. So that may or may not be it. So we'll have to keep an eye on it. But the day before a holiday is a very, very positive day. The most positive day of the year, of course, is the day before Thanksgiving. That is the most positive day. The other holidays are positive, but nothing as big as the day before Thanksgiving. Everybody has a wonderful Thanksgiving. By the way, I hope that all of us out there in the family of TFNN and all of our listeners do something, for the veterans, and that's included in those of you that live in foreign countries that have soldiers there. I really believe that people that give their souls to the government to protect us deserve some special treatment. So try to be nice to a veteran. It always breaks my heart to see these people on the street corners. And I know a lot of them are not veterans. They're just wearing the khakis just to try to raise money. But, there are a lot of veterans that are under a great deal of stress. And, try to help them if you can. That's something that I think we should all use as a goal to try to do this. We have a wonderful Veterans Administrations here in Tucson, one of the better ones, and fortunately I get to play poker with some of those guys, and they've really done a great service to our country. Okay, let's move on here to a couple of things that we need to talk about. I believe that we're very, very close. Let's just take a look here at the Australian dollar here, because we've been down in this area for quite some time. It's in the news quite a bit now because the Australian economy is picking up, and we've been down at this 78% level, around this 73.50 for quite some time. So we might be watching for a bottom coming in here in this Australian dollar versus the US dollar. You'll see there's an ABCD pattern that extends down to 72.80. That's about 60 pips, and a pip basically means percentage in price. Which is equivalent to a tick. But if you'll look at that level down there around 72.80, that's a beautiful ABCD pattern from last April, a little below the 78% level. Right now we're trading above the 78% level, so there's a possibility of that 3 drive to a bottom forming down there in that Australian dollar. And if it does, it's going to offer a very, very low risk buying opportunity. Now, it may or may not happen, but it's something that we want to keep in mind. That's one of the ones that I think look extremely interesting for sure. Now, another one on the currency front that I think is extremely important here, and that is the Japanese yen with the dollar here. This is actually the yen versus the dollar, and you'll notice that if we get up to this 112 level, that would certainly be a great area for a potential sale, because we'd have a beautiful ABCD structure right at the 78% level. We're trading a little below 111 right now, so it's got a little bit more to go, but we can make those very easily. As you can see on the bottom down there, when we were making those 1.27 expansions, we had a beautiful 3 drive down there at that 104 level, and we've had a pretty good rally, into that. Folks, I know a lot of you folks don't follow the futures markets, but the futures markets have really been hammered. Not just the grains. Wheat, corn, and beans have been decimated, of course. $2 break in beans, which is $10,000 a contract. $1.50 in corn. Almost $1 in wheat. I mean, these are huge moves, but we've had big drops now in the last few days in sugar. And sugar has broken down. Coffee has broken down. These are staples that we use all the time, and This is not good from a long-term perspective of the economy if these continue to the downside. Now, this could just be a washout. Some of it is related to tariffs and some of it is not. You know, the sugar is certainly not, and coffee certainly is not, but the grains are. But these are all very important commodities, and if they're getting hit, we need to watch it very, very closely. So we'll be following that, you know, especially this coming week. And we're in the middle of the growing season now, and the old adage is corn is as high as an elephant's eye on the 4th of July. So it is growing well, that's for sure. Now the weather can get really hot and rain can dissipate, and that's what causes the problems. But that's not on the outlook right now. Okay, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've updated, we had a request to update that NASDAQ chart that I posted earlier. Basically, I just drew in the Gartley pattern so that you could see it up there at that 7160 level. Now we're trading around 7141, backed off about 20 handles. But that is an ABCD structure. There's, lines up perfectly. It's right at the 50% retracement. So that's what we're looking at. We're seeing almost the same thing in the E-mini S&P, but it's not nearly as bullish as that NASDAQ. So it is completing the pattern, but not in the same structure that we're seeing with the NASDAQ. The NASDAQ one is just lined up absolutely perfectly. You just can't you just can't see it any better than that. Now, I've also had a request to talk just a little bit about the Treasury bonds. We've had a really strong rally here since June 7th here in the bonds. We'll bring it up here to take a look. You'll notice here that we just completed a little ABCD pattern down there at that 144.16 level. We're up about half a handle, up around 145 right now. So that has completed. That 145 level, of course, is the 78% retracement off of the daily high that we made, several weeks ago. This is just a very shallow rally. This is 1 month now, folks. We're in the 3rd of July, so holiday tomorrow. So when we come in Monday, we're going to be a whole month since that bottom, and we've gone from 142 to 145 and change. That's a very, very shallow rally in Treasury bonds, which was highly suggestive that we'd be looking at a market that would be ready to, head to the southern hemisphere. In other words, to go lower. Whether that'll happen or not, certainly remains to be seen. Now, we've had a new highs in the crude oil overnight. We just cleared $75 a barrel in the August crude. We got up to 75.15 or so. But if we take a look at the gasoline futures, which is the most bullish at this time of the year, you'll notice that we made that 61% retracement here last Wednesday, and all we're doing now is making a little snapback rally. In other words, with the crude oil making new highs, we're seeing a divergence here in the gasoline futures, and this is up to date because we're trading around 212 right now, with the previous high being 215 on the 61% retracement. So that's a pretty big divergence, and we're seeing the same thing, of course, in the heating oil, which is contra-seasonal because that's not nearly as strong as seasonal this time of the year as it is, during the October, November, December time frame. So we need to watch that. Now, getting back to the interest rates for just a second here, if we take a look at the utility index, you'll notice that the utility index has just completed a very large ABCD pattern up there at the 720 level. That, you've been straight up for basically 10 days, and that is basically a snapback rally because the market was extremely oversold, and this is a very large ABCD pattern going way back to January. So I would think this is a very, very important pattern. Now, if we get above the 728 level, this would tell us that this pattern has failed, and it's most probably getting ready to go to the downside. But right now, that 720 level, 720 to 725. In the utility index, looks like it would be some pretty significant resistance. If you'll notice that in November of last year, when we were making that 3 drive to a top pattern, there's a perfect ABCD pattern. That is what we refer to as Mother God and Country. You can see that light yellow triangles that are there. And then if you look to the far left, back in November of 2016, and that, of course, is the election night. If you'll see that there, you were making a beautiful 3 drive to a bottom pattern at a 61% retracement. In fact, we were doing the same thing in the stock market, but only at a 382 retracement, and that was with the Dow down 800 points that night before North Carolina swung over to the Trump camp, and then the market took off and has never looked back. But getting back to this Dow Jones Utilities, we are there. Now, there's one caveat here, and that is the fact that this market exploded off of the C point. And that destroys the symmetry a little bit because the ABCD pattern should have been a little bit more quiet on the move from C to D, but many times it'll just go up there and hit that and then turn around and go over. So watch the utility index, because that'll have an effect on the bond market. And the bond market, as you know, we are in a bear market, and I don't know how much of a rally we're going to get, but it's beginning to look like we're starting to slow down on the rally front for Treasury bonds. We need those September bonds to clear that 146 level with gusto, and then it would have a chance to have a pretty good move. I'm not sure what time we close today in the stock market. My guess is it's probably about a 2 hour. They're probably going to close about 2 hours. My guess is probably 1 o'clock. And that would be 3 hours before the close, but that would be my guess, is that I don't know, someone in the den, some of these really smart people might tell us what time that would be, so we can tell the people that are listening to us, where we stand there. So I think it would be, I believe it's 1 o'clock. That's just a wild guess, a swag, folks. So I'm not 1 p.m. What a lucky guess. Thanks, Gator. Appreciate it. Anyway, let's take a look at one other one here that's interesting here, and that is this banking index. This one had been the leader ever since the bottom way back in November of 2016, and you can see we're down in the area of the March lows. We haven't taken those out yet, but the ABCD structure on this banking index tells us that we want to go about another 5 to 10% lower before we come into some really strong support into this area right here. But that's neither here nor there, but it is starting to move to the downside in that. The Dow Jones has not completed the ABCD that we've done in the NASDAQ. The New York Stock Exchange Index has not completed that ABCD structure, and so we are seeing some divergence here. But remember, we're in a holiday atmosphere. If we're going to close 3 hours early in the stock market today, you're only talking just a few more hours. I mean, I don't even know why they even opened today. They probably should give us a 2-day holiday, and well, we'll see. Anyway, we'll keep an eye on that. Thank you very much, John, for bringing that. The 4th of July market holiday, U.S. equity options market closed at 1 p.m. and extended hours till 4 p.m. So the last 3 hours of the day will be closed. I imagine we're going to be trading Globex tomorrow because the rest of the world is going to be open. And of course, today's a big day in England because they're having their big game today against, who do they play today? I think they play, maybe they play Brazil. I don't know who they played, but they're playing somebody very important today for the World Cup. And I know it's a big thing because we have so many friends over there that have already told us, don't bother me from 2 p.m. on. So we'll see what happens with it. I'm not too much to say I'm not too much of a soccer fan is the understatement of the year. I don't even know how big the field is, how many players there are. I did watch that penalty kick with Russia the other day against Spain, and that was rather exciting, but who knows. Okay, let's take a look here at a couple of things that we've had questions about, and we'll be right back after these words. We want to talk about silver. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, before we get to the silver, I wanted to post a chart of the NASDAQ because in the last 15 minutes, we've lost 60 handles. That's $1,200 in a matter of about 15 minutes after hitting that ABCD pattern up there at the 71.64. So we can certainly say that was a valid one. But to give up that much that quickly is quite unusual, especially, right on the opening like this. But they call it opening. They call that opening hour amateur hour for a reason. So pay attention to it. Let's get back to the silver for just a second, folks. This is where we were as of Friday. The first 2 days of the week has seen us come down to test the 78% level down at that 1580 again one more time. We're right now trading above $16 an ounce. So we'll see how it's going. We've got gold trading at, we're up about $15 off of the low at 12.53. I believe we're still going to be heading towards that bigger pattern down there in gold down around that 12.20 level, but that probably won't be hit until sometime this week, maybe early next week, but we want to be watching it very closely. The big surprise, of course, was the collapse of the platinum market. Folks, do you realize that platinum is trading $400 an ounce at a discount to gold, and it used to trade at a huge premium? That's a sign that the platinum is not in demand like it used to be. I mean, that's a big spread to go from minus 300 to plus 400. Boy, that's a huge spread difference. So that's telling you that the demand for platinum has certainly dissipated, and that's usually mainly in, from what I understand, catalytic converters for the diesel engines and stuff like that. So, and I imagine diesel engines will be on the way out if Elon Musk has his way, because he's coming out with trucks that run with electric. So we'll watch that one closely. Alrighty, now we had one other question about another currency that I wanted to bring up, and that is the British pound. Here we coming in, but by the way, they don't celebrate the 4th of July over in the UK, so they will be open. You'll notice here at the 129.60 level, there's a beautiful 61% retracement. We're trading about 131 and change. Watch this very closely if we get down to that level. And the reason for that is that's a 61% retracement off of the low that we made back there in February. Well, actually, the low was made in January of 17. Then we made a secondary low. But keep an eye on that, because that's going to be a really interesting one to look at, because at that spot, you're going to be looking at a very substantial correction. And if this is, in fact, the start of something really big in the British pound, that's where it could go to. And we've got some more time to get to that spot, so you're going to have some other patterns that will line up with it, and that's the ideal. But 129.60 in that British pound is going to be something that's really interesting, in my opinion. So let's just keep an eye on that. When someone's asked a question about these commodities, folks, all I know is that when these commodity prices collapse like this, that means lack of demand. Now, some of it's related to the tariff and panic and all this stuff, but this is not a good sign for the economy if you're seeing collapse in commodity prices. Look at copper. Just 2 weeks ago, we were trading at 331, and now we're trading at 295, 294, and that's up from where we were just the other day. So these are huge moves that we're having, and whether they're going to have much of an effect on these longer term or not, we'll have to wait and see. But that's neither here nor there. We need to keep watching that as we look at some of these going through the patterns that we're looking at. But they all look pretty bearish, that's for sure. There's no question about that. They all look very, very bearish. The only one that's not bearish among the commodities, of course, is the crude oil. Now, the heating oil is still in a bear market. It's rallying back a little bit. Gasoline doing the same thing. We're having a little bit of a rally in the grains today. We've got corn is up about 7 cents. That's a relief rally. We got down to 359 in the corn market yesterday, which was a big drop. Beans were down quite a bit, but they're still way below the 78% level. As is the wheat's getting a pretty good rally, up about 10 cents. But these are just very, very oversold conditions. So we'll kind of keep an eye on that. The one that pay attention to this October cattle, because that's in an area where it should be topping up in here. I know it's up a couple of ticks today, which is pretty much nothing, but hasn't taken out yesterday's high. But keep an eye on that one. That's going to be an interesting one, to take a look at for sure. Right now, we've got the gold has been as high as 1254. We're trading 1253.5. That puts us up $15 off the bottom. This is the biggest rally we've had in 3 weeks in gold, and I think it's just a relief rally, coming off of that level. We're having, as Basil would say, we're having a bifurcated market today with the Dow Jones still rallying and the NASDAQ coming off. NASDAQ has now dropped more than 50 points off of that 1.27 ABCD level up there at 71.64. So that's going to be an interesting one to see if it's if you're looking for value. That's certainly giving you value, but it's coming off so fast. There's no reason to try to catch the old falling knife. You want to wait till that knife sticks in the ground and then see where you are. So we'll keep a close eye on that one as we look. But there's certainly something going on over in that NASDAQ. That pattern has definitely completed. There's I don't think there's any question about that, but we'll wait and see as we go through. We don't have any more guests this week. For Thursday and Friday will be the usual program. I've got one potential guest coming on, but haven't been able to reach him as of yet. Next week, I believe we have, I believe Norm is coming on somewhere around the 13th or something like that. And then we're also going to have Tim Bost come back as one of our guests, one of the financial astrologers. And I'm still working on Larry Williams. He's a little very, very busy right now, but I would like to get him on. And, of course, we'll have Dennis Gartman on. He was our guest this week. We'll have him on in another few weeks. It was always very interesting and entertaining to hear what he has to say. So that's what we have scheduled for. So you're right, Marshall, it could be deflation out there on some of these commodities. And if it is, that's not good for the economy because, these people use these, they use these things. The people are not going to stop eating. There's no question about that. But they are going to stop using as much copper or maybe as much silver, maybe as much gold. I don't know. But the fact that these have been under a great deal of pressure really means something. Now, we're under some pretty good support coming here in some of these things. Remember, we have a really strong seasonal in gold starting in July. July, August, and September, Bill Meridian pointed out, these are the three most positive months, for the gold market. So we are looking for a rally, and of course, $15 the first day is a good start. So we'll watch to see what the pullback is on this, and maybe that'll give us an indication of where we're going to be in the next leg in the gold market. Because $15 up, just a regular, a 382 retracement on that takes you down about $7 or $8, and we can see retracements before that have, go to expansion. So our price objective in that gold still is around 1220. Whether we're going to get there or not, I don't know. But we went through the one in platinum like it didn't even exist. So, but platinum is much thinner market and has been much more bearish. So we'll see. Okay, 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and as you can see, the NASDAQ just keeps continuing to sell off. We just broke the 7,100 level. The high was 71.64, so that's down quite a bit. The NASDAQ is leading the way. As you can see from the chart that I've just posted, which is the New York Stock Exchange Index, we're not seeing anywhere near that same quality of rally that we're seeing in the Dow Jones or the NASDAQ in that New York Stock Exchange Index. So there's definitely a tale of two markets. So, keep that in mind. Sometimes it means something, sometimes it doesn't, but this time could be one of those times. The fact that it came off so quickly off of that ABCD structure should mean a great deal. And remember, this is a holiday atmosphere. We're closing early today, 1 o'clock New York time. So this is going to be a very interesting day. And of course, we'll be followed by the holiday, and then we'll be looking at Thursday's action, and we'll see, what happens. So what happens the day after the holiday always remains to be seen. But this day has a positive bias for the Dow Jones to close higher. Better than 70% of the time it does that. So Whether that'll continue that way or not, remains to be seen. The foreign exchange markets will be open as usual the rest of today, all day tomorrow, Thursday, Friday. So those will be normal, and we'll be following that. The metals markets will be trading also. The banks will be closed tomorrow, so we'll have some good things to look at when we come in here on Thursday to see some of these things. I'm trying to have Rich Anderson as our guest on the day after the holiday. We're having a huge sell-off in some of these grains. Today they're rallying back a little bit, which is good. In fact, that corn made some pretty strong support down there at 360 a bushel, with the low being 359.5. But we'll see whether it retests it in the next few days or not, because July is always interesting. Remember, we have a solar eclipse coming in here on Thursday, July the 12th. And then we have a lunar eclipse on Friday, the 27th of July. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!